Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 36, which is a Forex pair, this time Euro USD. If you aren't familiar with the series, don't worry, I'll make sure to attach the entire playlist, which includes all the videos by order, in the description below. And I also attach my Telegram channel, where I forward the analysis and videos from TradingView and YouTube, in case you want to get notified. So let's do it. As usual, for those who already know, we've got 35 previous episodes, so enjoy it with a cup of coffee or tea, whatever suits you. We always start from higher time frames, which we call our rejection time frames, daily and weekly, to know where we stand in the market. Half of the work is done here, and then we zoom into lower time frames, H4, H1, or even M30 sometimes, to look for setups. So starting from the higher time frames, we know if you are overall bullish, bearish, or stuck inside the range. And as price approaches the upper bound, it can be horizontal, just like this one, or non-horizontal. We'll be looking for sell setups. And as price, of course, vice versa, approaches the lower bound, it can be horizontal or non-horizontal. We'll be looking for buy setups. We've got three types of rejections. The first one is a typical support and resistance, where we have many failed attempts to break above or below a certain level or area. The second one is just like support and resistance, but it would be a non-horizontal one, also known as a trend line. As price approaches it, we'll be looking for buy setups, vice versa, we'll be looking for sell setups. The third type is a supply and demand zone. So when we have an aggressive movement downward from a certain base, that's a supply zone. As price retested, we'll be looking for buy setups, vice versa. When we have an aggressive movement upward from a certain area or base, it's a demand zone, and as price approaches again, we'll be looking for buy setups. So let's do just that on Euro USD. Let's start with our support and resistance. The way to do it is very simple. I've done it many times before on the previous episodes. You draw a random line on your chart and drag and drop it in a way to connect as many swings as possible. So the best ones are where we can connect. Let me draw it. Here we go. At least two, but preferably three swings. It can be two highs, one low, two lows, one high, three highs, three lows. That's why we call it support and resistance, right? So it's not only a support, it's a support and resistance, right? Resistance here and support here and vice versa. So let's do it. I'll skip the upper ones to keep this video as quick as possible, at the same time as educational as possible. So let's go lower. We can see that we've got a very strong rejection here, but if we look previously, you can see many rejections from it. So that's basically also a support and resistance. We've got rejections here, rejections here. You can even make it higher, right? You can touch multiple swings around this area. And as mentioned previously, we've got a supply zone here. We'll get into supply and demand zones in a bit. So let's draw this one and then zoom in to draw the recent ones, which are very close with the current price action. So if you zoom in a little bit, because we don't really need like the older ones anymore, because we don't have any data here, right? So now we can zoom in and draw the most recent ones. Now, let's go to green and let's drag it and drop it in a way to connect as many swings as possible. And you can clearly see that we've got a very strong one around this area. Was acting as resistance previously, multiple rejections from it. Then price broke it upward. Of course, it's an entire zone and not a laser level. So price retested it here, support, and retested it here again, support, broke it downward. So now it's acting as what? As a resistance. As you can see, rejected here as a resistance, then broke it upward, now acting as support, then price broke it downward, acting as a resistance, and so on. So it's a very strong support and resistance area. Of course, this is from weekly. In a bit, we'll zoom in also to the daily time frame and we'll do the same. But if we find a lot of supply and resistance from weekly, chances are that we might not find good ones or like new ones on daily, because we've got already pretty much everything, right? Next, of course, it's an entire zone, so you should treat it like this. For example, let me show it to you. Here we go. So this is the upper bound and this is the lower bound. That's our entire support and resistance area. So I like to cover the swings where the rejection already started, right? So here we go, the wicks here and the swing here. Next, let's go for blue because we've got around our green up there. And let's drag it and drop it in a way. We can see that we also got one here. It's not as strong as the previous one, but it's also a support and resistance. We can see multiple rejections, especially lately. Support here, resistance here, then price broke upward, support here, then support here again, price broke downward, act as resistance, and then trade it lower. So as usual, we'll make it as an entire zone. Here, of course, like you will see that the zone is very big from lower time frames. On week, you can see it like as a small one. So that's it. And let's go for green this time because we've got blue. And here we go. We've got multiple rejections here, right? So this is the first one. And that's it. Right. Let me draw it for you. Support here, and here as well. And here you can see also a rejection, which is also what? A demand area here. We'll get into demand in a bit. So this is our support area. Let's draw one. Of course, it's an entire zone and so on. Here we go. If you move lower, you can see a very strong one around this area, multiple rejections from it. Let's go for blue. Let's make it as a zone, and that's it. So I'm trying to make it as quick as possible, like to have time for other stuff. So that's just for weekly time frame, right? Then you zoom in a little bit and you monitor the price action. So we start from the zoomed out picture to draw the long-term or historical support and resistance. Then we zoom in a little bit to monitor the price action or to do our market structure analysis. So we were obviously overall bullish, got our first impulse, correction, impulse, a deeper correction, impulse, then we had a lower high. Usually when you are in a bullish trend, you would have higher lows and higher highs. Then this is a lower high, which is an early alert that the sellers might be exhausted and the buyers might kick in soon. But it's not like confirmed yet. To be confirmed, of course, this is from weekly, right? So we need the sellers or the bears to break below the previous low, which is basically here. Then starting from here, we are overall bearish from a long-term perspective. Of course, from a medium-term perspective, we were bearish here, but from a long-term perspective, from weekly, now we are overall bearish, and we've got our first impulse, which is this one, which is responsible of the shift in momentum from bearish to bullish. So impulse correction, we are currently in this impulse phase, right? Approaching a support area. So now we are expecting a correction till here, unless of course this support is broken downward, it would become a resistance and a movement to the lower support would be expected. Okay, that's basically it. Let's try and draw our non-horizontal support and resistance. I can see it very clearly, but we can see it better from daily. We can see that we've got this channel here, right? And let's make it in brown as usual for our rejection trend lines. That's how I like to do it. Here we go. Let's go for OH4 also and make an offset for it. That's it, right? So this is the channel covering or engulfing the overall bearish movement. So from a long-term perspective, for the bulls to take over, we need to see not only a break above the trend line, but also above the last high, which is here in this case, which would also mean a break above the last resistance, which is obviously this one, now acting as a resistance area. Okay, but of course, like let's take it step by step. Currently, we're approaching a support. Look at how many info we gathered just from weekly time frame, and this is for our non-horizontal support and resistance. But as mentioned previously, we can see it better from daily time frame. Anyway, let's go for orange for this one because I want to mention one more thing, and I make it in brown. If you zoom out a little bit, right, from a long-term perspective, you can clearly see that we are now inside this big range, right? So down, up, down, up, and so on. So I want to try and find a trend line or a horizontal range which covers this overall movement. That's how you start from a zoomed out picture to a zoomed in picture. And you can see that we can draw this trend line here, which engulfs this movement like here, and you can make it in brown. And this is it also for the upper bound. So you can go for this one, or you can simply go for this one here and make it a little bit lower. That's it. So we are currently trading inside this giant symmetric triangle from a long-term perspective. Impulse correction, impulse correction. We're currently here. That's why we are looking for buy setups. And from a shorter term perspective, if you zoom in, anyway, let's zoom into daily. You know what? So here we go. You can see that from a medium-term perspective or shorter term than weekly, that price is currently trading inside this channel and currently approaching the lower bound. So we've got many rejections from this area. We have our support area, we have our non-horizontal support, which is the overall direction for weekly time frame. We've got our lower orange trend line. In my opinion, it's acting as an oversold area. So we've got already 3 rejections from here. All we need is just zoom into lower time frames, find that trigger, and that's it, right? And so like we covered supply and resistance, trend lines, now let's go for supply and demand zones. We can find many on USD. If you zoom in a little bit, you can see that you've got a supply zone here and aggressive movement downward from it. So as price approaches it, we'll be looking for sell setups. And of course, it's also what? A resistance area, acting as support previously, now broken downward resistance, and also the upper trend line in orange. So we've got also many rejections from here. And for those who already saw it, I posted one on USD on TradingView on my profile. That's it, theSignalyst. You can check it out, that we are looking for buy setups here because we've got many confluences, many clues. And we are looking for sell setups around this area because we've got many confluences like showing us that the bears would be taking over around this area. Of course, we always zoom into lower time frames for extra confirmation. Now, for supply and demand zones, as mentioned, we've got a supply zone here. If you zoom out a little bit, you can see that we've got, as mentioned previously, a demand zone here. We previously got a supply here, price rejected downward, as you can see here. And we also got this supply zone previously from weekly, then price rejected it around this area. We got this demand area, price filled it and traded higher, and so on. We also got this supply area. So price retested, we'll be looking for sell setups around this area. So for now, for the fresh ones or like the most recent ones that we want to keep an eye on, or the closest ones, are this demand area, which price is near around it. So we've got a demand, a support, a lower brown trend line, a lower orange trend line. So many confluences already, but it doesn't mean that I should enter with my entire account in this trade, right? No matter how strong or how many confluences you have, you always enter with a fixed risk per trade that you usually enter with. All the trades should have the same effect or effect on your account or weight on your account. Okay, so because price can still break it downward for it to become a resistance and test the lower support. Okay, always wait for extra confirmation. Trading is just like chess. Wait for your opponent, which is in this case the market, to make the first move and then react accordingly. You don't predict what might be like the opponent's next move. You always wait for it and then you react accordingly. So that's our demand, and the supply we saw it from daily time frame, which is here. So now we know what to look for. Looking for buys here, looking for sells here. Let's zoom into lower time frames and look for buy stops because price is currently approaching the lower bound. Let me delete it. If you go to H1 time frame, you can see that we are currently in this bearish trend. We were overall bullish previously. We tested this resistance, price moved below the previous low, break, classic retest, held it lower. So we are clearly now overall bearish, lower highs and lower lows, but we can clearly see that the impulse movements are getting weaker and smaller. So we've got our first impulse, a flat correction, which means that the sellers are very strong, not letting even the buyers make a correction, right? So it's just like here, and here we go, flat correction, trade it lower. That's how also you can feel the overall market on who is currently in control, how tough or like how strong the sellers are, which were very strong. And we had another impulse and also a flat correction, right? Another impulse, and look at this. Price got stuck inside the range. The sellers couldn't win this battle. They couldn't push any lower, so they are clearly now in control. They are winning the entire war. So we've got a battle here, right? So around here, they struggled to win this battle, while this one was very easy, an immediate movement downward. But this one, they struggled, which means that it's an early alert that the buyers might kick in anytime soon, especially that around a support, trend line, demand, and so on. But we always wait for extra confirmation. As per market structure 101, we want a break above the high because we didn't see it for a while now. So price was making higher lows, broken downward, now started to make lower highs, right? Lower highs, and here we go. So traded lower, lower, and lower. So that's our last major high, of course, from H1 time frame. That's why, as a basic approach for the bulls to take over, we need to see a break above this area. Of course, you can always, depends on your trading style and so on. You can always go for patterns. For example, we've got, here we go. You can draw a trend line which covers the entire movement downward now. So for now, we are trading inside this pattern, and for the bulls to take over, we need to see, as mentioned previously, a break above it. Meanwhile, the bears can still kick in and trade lower and lower inside this support because it's an entire zone. And we've got our trend lines here, so we can still trade lower and make one more impulse move downward before the bears finally take over. In this case, we would have a trend line like this. So we can't really know. That's why I'm giving you many possible options. Let's go for blue, and let's go for this one. Let's read these ones to keep the chart clean. And this is basically it. While bearish, waiting for the bulls to take over to enter the buy, it might respect the upper red trend line and break above this high now, or it might be a little bit lower to form a new swing high, and this would be our last high. So that's it for, of course, meanwhile, we can still break below the support for it to become a resistance and so on. So that's it for your USD. Hope you like this episode. Let me know in the comments if you'd like me to cover a specific instrument next, no matter if it's a commodity, index, stock, right? Whatever you want. You can apply the same logic on any instrument. Like, as I always say, you can hide the instrument here and apply the same logic. Best of luck, and I'll see you on the next one.